You need only one candle to predict the next candle and the next few candles. Right here are the three main models that I've shown you using the CRT. Your stop and reverse, your stop and go, and your candle impulse model, okay? Now, all of these have the exact same foundation of starting from this one candle. And this video, you understand the timing of that candle we wait for and exactly what type of entry model you use to actually enter on the next candle, and a whole entire checklist that you can use while you're trading this exact model. Now, this is going to be from our previous video where I spoke about the time CRT and the candle impulse, but we'll be specifically focusing on the 5 a.m. time CRT, as from my testing, it holds the highest probability. Now, you want to make sure that you are using the UTC -4 on your chart, because that will allow you to have the exact New York times, which I'll be referencing in this video. Now, the same flow happens. We want to wait for our formation of our CRT, which will mainly be our 4-hour 5 a.m. candle. Now, the sweep, which can either happen from 9 a.m. to 11 a.m. Eastern Standard Time, which are our two main parts of this entire theory. Formation, to sweep of CRT, and then lastly, the candle impulse, where you're usually predicting to target the opposing side of the CRT. If you've taken out the high, firstly, with our sweep, you then look to predict and target the low. Now, our flow of analysis will hop from the daily to the 4-hour to the 40-minute time frame, and then lastly on the 5-minute time frame if you're looking to get a more precise entry, okay? Now, the daily will mainly be used to identify any key levels that would form and align with that 4-hour 5 a.m. candle for that specific day. That can range from a fair value gap to a breaker block, rejection block, liquidity level, or any other order blocks. All of this is being used from our daily time frame, and majority of the time we also want to be focusing on following the underlying trend. Now, the next part is going to be our most important time frame, which is the 4-hour time frame, as this is exactly where we'll be finding our 5 a.m. time CRT. This is the one candle that will allow us to trade the next few moves of this entire session. And if you're looking to trade this with your futures, that being your NQ, your ES, or more specifically your NASDAQ or S&P, substitute the 5 a.m. for the 9 a.m. time CRT. I found that this actually works a lot more better. Now, on the two specific candles you want to look for price to actually print out, it's either going to be a major expansive candle, which follows a large body and has minimal wick. The main reason for this is that within this one candle, you can identify your accumulation, manipulation, and then major distribution. And within the major distribution, it also entails liquidity from formal traders or traders just trying to follow the quick trend. Majority of the time, if a CRT is about to occur, it will happen in the opposite direction of this candle. This being a bearish candle, we expect price to create a bullish candle right after that. If it was a bullish candle, you then expect price to push up and then create a bearish candle to the downside, okay? Now, the indecisive model, you want to one where there's more wick than body. Yeah, don't expect major volatility, just expect to either come for the high or the previous candle equilibrium, so the 40% of this candle, okay? Now, our 40-minute time frame is where we're looking for the purge of the CRT, okay? And this can either form from your 9 a.m. to 11 a.m. Eastern Standard Time, and you want to majorly make sure that you also use the 40-minute time frame to also look for any other confluences, such as price creating a lower time frame CRT. So here's your 4-hour CRT, price then come on your 40-minute time frame and creating another CRT, and then it then creates that major purge, making sure the purge has the 40-minute candle closing back into the CRT to ensure the highest probability of price following through to the opposing side. Now, our two main models we want to be using for our entry is either going to be our AMD and our turtle soup. All of this also entails your change state delivery or market structure shift, okay? Now, the last part being our take profits, you want to be focusing on either, as I said, the previous candle equilibrium as for your TP1, so just the 40% of this candle should suffice, or you then target the high opposing side for your full TP, okay? Now, let's just go do a quick recap on all our information about the formation of the CRT. As I said, guys, this is all part of the previous video. If you guys do need to understand this fully in depth, I have made a previous video on that, and I'll leave that in the CRT playlist, okay? So, focus on the 4-hour candles. The main candle that we're going to focus on is the 5 a.m. candle. The 1 a.m. also holds a lot more probability just because it also aligns with the New York Stock Exchange Open, but I'll make a separate video on that, okay? Our main understanding is that this 5 a.m. candle will then create the range of the day. All the price action that is contained within here is still considered a consolidation up until our sweep happens. Once the sweep happens, you then be expecting for price to make the next candle being a bullish candle to the opposing side, okay? As I said, this sweep can happen for anywhere from 9 a.m. to 11 a.m. And from this point, once price makes that candle impulse, you're then targeting your high or the previous candle equilibrium, okay? Now, this is our entire checklist that we built up for this entire trading plan. Our daily is where we'll be looking for our key levels, okay? The 4-hour is where we look for our time CRT. The 15-minute time frame is where you look for either entry or you look for a lower time CRT for more confirmation. And then your 5-minute time frame is for more precise entry models that you're looking for. Now, I'm not sticking only to the 5-minute time frame. If you guys want to go lower towards the 3 and 1-minute time frame, you guys can also use that if you're looking for a bit more confidence for your exact trade, okay? Now, I have also seen a lot of people also asking for further teachings on a lot of the models that I teach. You can also look to book a call with me where you can personally ask me the questions that you do need help with, as well as can also join our Discord link in the description where I hold and send out my analysis on a specific day and the CRTs, CITs, everything I look for on that specific day. And if you're not inclined with Discord, we also have a WhatsApp line in the description where you can also get direct contact from my team, okay? Now, let us hop into some chart examples of this all in play. Now, right here, we're going to use fastpool.com. Yeah, we can use all the indicators that it is apprehensible to us that are fully customizable to you guys' liking. You guys can use it and you can stack over 64 chart layouts right over here. If you guys are indicator traders, as I said, guys, this is going to be in the link in the description if you guys do want access to this. Okay, so now we're on the 4-hour chart of US30. However, I also want to go back just to show you guys that the same concepts were being applied in the market even before this. So I'm giving you guys tested data that you guys can actually rely on in the most recent markets. Okay, so yeah, we're going to go to January, the first, essentially 2 years back. We're going to test this concept and see how it actually played out here. And as you can see right there, we get brought back all the way back into 2022. Okay, so now we're going to be focusing on our 5 a.m. candles and focusing on how price actually sweeps the candles and then moves right after that, okay? So I said you guys want to make sure that you guys have the correct timing for this. So right here you go. Here is our 5 a.m. candle and we have our high at this point and our low right there, okay? And as you can see, our price reacted around this candle, a nice 5 a.m. candle, okay? Major expansion happening right here, okay? We get the sweep and then price sort of dwindles around with the sweep, but later on it then comes to take out the low point. You would have found multiple areas to enter your trade from. And then we go on to the next day, looking once again for the 5 a.m. candle. Okay, there we have our next 5 a.m. candle of that day. As you can see, once again, here is our stop and reverse model. Here, price is going, and then it stops and pauses in price, and then reverses, comes take out the low. Right over there, you would have looked for your lower time frame entry. All of these parts, once you see a sweep, you could then go down to the lower time frame, the 50-minute to look for your lower time frame CRT, or to look for a 500 AMD model. Same thing over here, then price reverses. Once price sweeps, the next predicted candle will be a bearish candle to take out that low, okay? If we keep on continuing from here, once again, we do have another model of this sitting up here, 9 a.m. and then we make a quick sweep and reverse here. Okay, price sweeps up and then comes back into the PCE of this price range, okay? So here would be the 50% of the candle, and that's where you're looking to take your short from the high and then target the low, okay? And then one more example of this. Okay, same thing right over here. 5 a.m. candle. The high and the low. And we can see the exact same thing presented to us. Price makes a sweep, and then it makes the next candle being a bearish candle that takes out the low, okay? So there's numerous occurrences of this happening even 2 years back, even before the candle series started to be spoken about. We still see this being applied today, and that is why we can also apply it in the most recent market. Now let's go over recent data. So here's our 5 a.m. candle on USD for today. As you can see, we have the high and we have the low. We then go down to lower time to check for price making a sweep of this. And our purge happens just around the 9 a.m. okay? 9 a.m. we do have our purge. And then from this point, you can still take your entry right off of this because, right, here is our 15-minute candle that just formed up before that. The 15-minute CRT. Right over there. The low and the high price sweeps the high point. And now we have two lows that price can target. The 15-minute CRT low and even further, our low of the 4-hour time frame, okay? And from this, you go on to your lower time, look for an AMD model. And here we go. There would be an AMD model right here, consolidation, manipulation, and the reverse. Once price makes that change state delivery, you then look to enter at this point, either once price makes that change state of delivery, or either once price taps back into this fair value gap, which is outlined right over here, okay? FVG of this candle to this candle, price taps in there, and then you can target low all the way down to this low point, okay? That was recent structure of this, and that's how price ended up playing all the way to the downside for this day using our time CRT. Now let's look at this specific day. As you can see, we have our 5 a.m. candle here, mark out the high, and we mark out the low, okay? From this point, we could then go down to a lower time frame to check for a lower time frame CRT. Okay, once again, we have the 15-minute make that initial sweep, okay? We have the initial sweep happen at our 1 a.m. We mark out the 15-minute time frame, lower time CRT. Here we go, the high and the low. And then we have once again another sweep around at the 10:30, okay? From this point, we then have yet another CRT form out of this high and of this low. So from this point, we've seen now that price is taking out three major CRT highs. 4 CRT high, the 15-minute CRT high, and the 10:30 CRT high has been taken out. From this point now, start to see that price makes a lower movement, and then you can then enter on your lower time frame. And the entry can be once price makes the inversion of this fair value gap right over here. Enter right over there, stop loss above the high, and then you target your 4-hour CRT. There you go. That is how you're going to be using the CRT to predict the next candle and predict the next move of your trade for that exact day. If you guys want more insight on this, make sure to book a free call with me or join the WhatsApp support group where you guys can be in close contact with my team and they can personally help you to all the CRT questions that you guys have. As always, guys, make sure to watch the previous videos on this time CRT model to fully understand it. I made a full entire playlist to it, and I'll see you guys there.